Collins, I would say on your go, I will start the introduction.
I think we're good to go.
Wonderful. Well, welcome everyone to the first session of the AfroSwissters Talking Business Series, presented in collaboration with the Legacy Roundtable and Zaria Mobility. We are recording this session, as you see, and the replay link will be shared afterward. Before we dive in, as mentioned, for those of you who've joined at 8 sharp, let's get to know who's in this virtual room. Please drop in the chat where you're from, where you're dialing in from, and the industry or area that you're interested in, so we get a better sense of who is part of the conversation today. We hope it will be interactive, and please feel free to pose questions in the moments we pose questions to the floor, but also feel free to post them in the chat. Today's focus is on how to turn remittance into sustainable investment, from one-off support to long-term wealth. Why now? Well, by 2025, diaspora remittance to Africa are projected to reach 100 billion, not naira, but actually US dollars, more than foreign investment and aid combined. Yet most of that money goes to urgent needs like rent, school fees, medical bills, money funneled from the diaspora to the continent. But how much of it is actually building businesses or creating lasting impact? That's the gap we're here to address. Today, we're asking, how do we move from sending money in a crisis to investing more strategically? And how do we navigate risk, build trust, and structure investments that last? To help us unlock this and unpack all those questions, I'm joined by Kotia, the founder and CEO of Zaria Mobility, who is based in Nairobi, Kenya. So over the next 3 sessions, we're diving into 3 big themes. A, remittance to investment, which is today's session. We talk about how to turn one-off support into lasting wealth and how to do this without getting burned along the way. In the second session, we will talk about women, innovation, and market entry. This session will explore how women-led businesses are shaping sectors like tech, beauty, and agriculture across the continent, and what investors and entrepreneurs can learn from them. In the third session, we will talk about mobility, return, and building or rebuilding trust. We will dive deeper into practical ways on how to tackle what it takes to do business across borders, across regions, and especially when you're not on the ground. So today, we're not just talking about money, we're talking about the money we send home, the trust we, share among each other, and how not to be afraid to lose not only cents, but yeah, I guess money. So without further ado, Collins, I wish to introduce you. I want to thank you for your trust. You reached out to me more than a year ago, and we've been talking. We've had some very fruitful, insightful conversations, and it's really exciting to have this conversation. And yeah, I just want to start by introducing you as the founder. You started Zaria off by helping companies and families relocate to Africa, getting their paperwork in order, finding safe housing, and navigating the cultural nuances of setting up shop on the continent. But over the past few years, you, Collins, and your team have become more than just a relocation firm. You have become experts. You are now strategic partners to businesses, embassies, and you help them grow and expand. So I want to start with the first question on how you got into the business of mobility and market entry.
Great. Thank you, Tallulah, and thanks everybody for joining. I think we're here to learn from each other and just have a good discussion. I got into this business in 2007 when I was tasked by my previous employer at that time, was a PR agency. And I was tasked with the mandate to set up an existing client in the company, set up shop in Kenya. The client was an NGO entity coming to do charity work in the country. And so I thought, NGO charity, that would be very easy to set up. That was in 2007. So we began the process, and it took almost 8 months just to get a license. And that is just charity and NGO. The transparency that was there, the bureaucracy, the corruption that was entailing the setup, it was just one hurdle after the other. And so I thought to myself, if an NGO coming to do charity work in the country can actually experience such loopholes and hurdles to set up shop, what about investors or companies just wanting to come and set up shop as a limited entity, or investors coming to create employment to Kenyans or to expand to the region? What kind of loopholes do they suffer from? What kind of hurdles do they go through? And so in 2009, between the period of 2007 to when I set it up, I resigned from my previous employer and established a company that would help investors and companies wanting to come and set up shop in Kenya with the relocation services and immigration services for a smooth operational transition. And as we were doing that, over the years, we discovered, why can't we become a one-stop shop? Because now we're getting inquiries of, it is taking us time to register. Why don't you play the part of registration, to settling in services, to immigration, and to logistical support? And that is how we introduced market entry in our company. And we help now companies and investors looking at setting up shop in the country with market entry, do for them case studies, due diligence reports, advice on market research, and just give them key pointers to look out for when they're coming to the market. So we became a one-stop shop to assist companies set up shop in Kenya and in the region. And in the 15 years we've been in the business, we've now grown to cover 8 countries in Africa. And we work with different investors, companies, trade departments from embassies. We've dealt with beauty and cosmetics, to agriculture, to mining, tourism and healthcare, and we are growing in the business. And that's why I believe we are here to empower each other, to give knowledge, and to assist where we can to help companies with knowledge, information on how the dynamics are changing in Kenya and the region and in Africa as well.
Thank you for this introduction, Collins. And we're talking about investments, but also remittance. So in your experience, how do most diaspora members engage financially with home countries?
I think from data, what we're seeing is many diasporians engage through proxies, that is family, close relatives. Very few diasporians will go through government incentives of investments. So money comes in. Kenya, for example, it's a turnover of about $3 billion US dollar a year for remittances from the diaspora. And that money is purely household consumption. So payment of school fees, shopping, hospital bills, community development. That is the wide range you're seeing the diaspora remittances and engagement from the diaspora back at home. It's purely family and proxies, either in personal businesses or personal investments that they're doing in the country.
And in your experience from the companies or entities you've engaged with, what have been the biggest risks and, hindering people from investing on the continent?
I think corruption is key. Lack of trust, transparency. We have checks and balances that have been put on the system that even the people who have put the same checks and balances don't really comply with them. The checks and balances that have been put there to make it easy for investments to flow in. Checks and balances have been made it easy for remittances to flow in. The people who have been mandated to take charge of those particular regulatory bodies are the ones creating loopholes and making it harder for companies to set up shop in the region, in Africa, in Kenya as well, by not abiding to the regulations for business setup. We are seeing situations whereby government, because of the ballooning debt, that is incurring in countries wanting to tax remittance coming from the diaspora, for example. So that hinders inflow of cash back home. That influence investments even flow back in the country. So lack of transparency, loopholes in government regulatory bodies that have been put into place to do checks and balances, lack of trust with the system, corruption, political instability, which is a cycle that we are seeing not only in Kenya, but in Africa as a trend towards every election cycle, pushes away investor confidence. So I think if we are to tackle such loopholes that are in the system, I believe we'll have a good flow of investments coming in, as well as trust from the diaspora remittances coming in as well, to see where the investments are going into.
Thank you. I think at this point, I would like to open up to the group. Is there anyone who would like to share an experience or a concern that has held you back from investing in Africa? And also, if you found a way to overcome that fear or take a first step, we would love to hear from you. Please unmute yourself, introduce yourself, and share.
I just open there my point. Once I had a friend from Gambia, and we tried to do something, but the problem was that many banks don't operate there, and that made it kind of difficult for us to create something. And I think this is a problem. And also, like, the infrastructure about internet was sometimes difficult to get. And yeah, this is my experience that I had so far.
Thank you for sharing, Daniel.
You're welcome.
Holland's infrastructure, internet, do you have any experience with that? And do you see a progression where Afro optimists, and you've been working on the ground, and I think Kenya, East Africa in general, is a hub for technological innovation. So what is your experience with this?
I think when it comes to, first of all, banking finance, so banking depends on country-to-country basis in Africa. The case, for example, of Kenya is that as much as we have many banks that are operating in the country, getting capital, the high interest rates is also a challenge for very many investors or people wanting to invest in the country. I mean, you get about 25 to 30% high interest rates. So access to capital is becoming a bit of a challenge, as much as we have a wide variety of banks offering different services. Other countries, like for example, Gambia, which is in the West Africa part of it, there's some countries that are regulated in terms of banking, just because of currency denomination per se. But we've experienced very many clients in shifting bases. For example, if you're setting up in West Africa, you would choose a country like either Nigeria or Ghana just because of the banking and the infrastructure that they have in that particular country and the mechanisms they've set up in that particular country to do business, and then operate outside that country to service the rest of the region. It is very hard to maneuver in some countries because of lack of proper infrastructure. I think Kenya has tried and is a dominant force in the region when it comes to digital finance, infrastructure, mobile services. I think we are one of the countries in Africa that is fintech oriented towards that space. So we have very many multinational organizations coming to set up shop from Silicon Valley in the US to just get the ideas of what we have ourselves in the country in Kenya. We are trying to build our infrastructure as well. It's not really perfect, but I think we are above very many countries in Africa when you talk about infrastructure. But again, we have systems in place. The African Union is also trying to channel infrastructure and connectivity of internet services in conjunction with the Africa Development Bank to other African countries, because unless you have proper infrastructure in those countries, then you're really not promoting investments or remittances in those particular countries. Or even if you're promoting remittances, chances are the percentages coming in will be very low compared to the African countries that have high infrastructure rate, high internet connectivity, because internet connectivity right now, access to internet with information is one big factor that African countries need to consider, especially those ones that are really struggling to make sure that connectivity is within reach for their citizens. But again, fear grips in, because especially for African government countries, because people with information have power. So some governments will try to restrict internet connectivity as much as the African Development Bank or other institutions will try to bring it in. They will try to regulate information by just bringing loopholes for infrastructure to develop in those countries. But other countries see potential in it and they grow with it, and we've seen results from it. Kenya being a good example within the East Africa region.
Thank you, Collins. Do we have any other persons who would like to provide feedback on experiences? Okay.
Something quick.
Wonderful.
So I've been involved in funding an organization or a project in Tanzania. And I think over the last 5 to 6 years, one of the more difficult aspects has been the transparency factor of channeling the money across various people to get it to the people that need it the most. To some extent, that means wherever it goes to, through which hands it goes, and then making sure teachers get paid what they need to get paid, and that the right foods, the right all the resources are basically used with the money, so that there's the transparency on all ends, both from people who are providing money for the project, but also from the side of the people working on the ground to make sure that they are appropriately paid. Now, this is just in a smaller rural area of Tanzania, so I cannot make the claim that this is a wide aspect, but I think I share some of the thoughts shared regarding transparency, and also trust, I think, is a very important element when being involved in any activity for the sustainability aspect as well.
Thank you, Manuel. Thank you very much. And it's interesting knowing your background in academia. Do you feel that there's also the lack of data that allows for this to evolve on the African continent?
I mean, I can speak of what I have learned through also the research, and there is evidence, I think, that exists around implementation of programs and others, not just, in my case, it's more educational programs, but I would be interested to hear from others whether there is actually data and evidence available from more local researchers, from more, voices from the ground that are not being provided the right and appropriate platform. Because in doing some of the research over the last few years, quite a few mentioned that there is a lack of evidence that's being used for policy, etc. That doesn't come from the top level, let's say, but who actually has been done from the ground. So I think there is a lack of research. Yes, there's also a lack of maybe available knowledge to the wider audience, but I do think that there is available information if one finds a way to get to the information and making sure that that's being promoted appropriately.
Thank you. And Collins, taking this into consideration, do you have a good example of where you've seen investments go well, go right? And yeah, do you have a particular example you could share?
I think we have investments that have been channeled to the right and appropriate, because we have mechanisms that have been put into place to try and see that investments are going in the right direction. But again, like I said, very many investors sometimes are really hesitant to invest money, especially when government increases tax, and that's what's going all wrong. Because when you increase tax, the operational costs go up. We're experiencing companies shutting down, multinational companies shutting down because of high cost of operations within the country, sorry. We are seeing loopholes or incentives hurdles being put in terms of investors getting even permits. to come and work, for example, in Kenya. That's just a wrong direction that government is doing, putting up sums like, for example, for Kenya, for you to get an investor permit just to come and open shop in Kenya, you need approximately 100,000 USD bank balance. Not many investors or people will have that kind of money. So some of those wrong trajectories is what you're advising government to look into. But also, apart from that, we have good channels of investments whereby we are seeing government coming up with tax incentives for investors and for companies setting up shop in Kenya or in Africa. Speaking from Kenya's perspective, the Kenya government set up something called an SEZ, a special economic zone. This was to lure investors and to bring both local and foreign investments companies in Kenya and to set up shop. It's a tax-free protected zone whereby companies can come and set up shop for a period of 10 years or 30 years, tax-free. Of course, the protocols for you to qualify for that, but we're seeing innovations, we're seeing companies, climate tech companies setting up shop in those particular SEZ parks to basically run the organizations because it's a tax-free haven incentive. Rwanda, for example, is encouraging companies to set up tax-free in their countries, and this is promoting investment as well. You don't have to have a local director to come and be part of the organization. You just have to have the right market entry to that particular country, and you're tax-free. And that promotes investment, that promotes companies to come and set up. When it comes to diaspora remittance, because of the loopholes in terms of taxation of remittances coming into the country, or because of mistrust by the diaspora sending money into the country, we have an organization called Kwanda. Kwanda is a fund that has been put together by diasporans themselves. And this fund is whereby the diasporans put money there and they channel that money into funding specific projects because of trust that they have. It is by a gentleman called Jonathan Gregg, I believe is Nigerian, and he came up with it because of lack of trust again. And this is a perception that has gone across board, even as we set up companies and as we set up investment companies in the region. Lack of transparency, lack of trust. You don't know where the money is going to. You send money, you're not quite sure it will go to the right channels, it will go to the right thing. So Kwanda Fund consolidates diaspora remittances, consolidates diaspora money, and they go country by country funding projects in the community. And they track the projects that they're funding. So that is a right direction in terms of investments that you're seeing the diasporans coming up with together because of lack of trust with what is on the ground. Apart from that, we're also seeing countries coming up with policies to protect, to empower the diasporians. Initially, that was never there, but now we're seeing very many, the Ministry of Foreign Departments consolidating each other to come up with policies that can protect the diaspora community, remittances being sent by the diaspora back at home, and how to channel that money even to government bonds. Have a diaspora bond, for example. Educate the diasporians on how to invest using the diaspora bonds that governments can basically bring across. So that's a right channel that we're seeing heading in the right direction. We're also seeing remittance service providers, some of them cutting costs on the remittances when it comes to diaspora sending money back at home, and that widens cash flows back at home. So I think in general, what I'm trying to say is that government is trying, or institutions are trying to make it easy for investors, either through SEZ, the special economic zones, tax incentives for investors and companies setting up shop in the region, or policies that are coming up right now to protect and empower investors as well as diasporians on knowledge on what is on the ground and how they should invest their money.
And Zaria Mobility is really part of helping diasporans and investors rebuilding that trust. What systems do you help companies or individuals with to create and make the investing more smooth and safer?
So I think as Zaria Mobility, what we've done over the years as we help investors to come and set up shop in Kenya is do market research, host webinars, educate investors companies wanting to come and set up shop, people from the diaspora, on what is happening on the ground. Share with them market insight of companies that are successfully doing well through setting up shop in Kenya or in Tanzania or in Ethiopia or in Rwanda that have come from either Europe, America, or Asia, and they're doing very well. So we do case studies, due diligence, host webinars, invite potential investors to come, invite companies to come, learn about the market, make them understand the risks management that are coming with the investments in Africa, because Africa has too many businesses and too little business. So everyone wants to come and flourish in the business, which is good. But then you need to understand the market research, do your due diligence report. So we enable investors and companies in the diasporans understand what is on the ground, what is on the market. If there's any risk management, risk overflows that we anticipate based on either political instability or change in regulation, we also advise them on how to go about it. So we put in checks and balances also for transparency, whereby in our own company, we have a platform whereby investors and companies can access information as well and track progress of investments they want to come and do in the region or in our country. And that creates transparency because we do checks and balances and we are open to referrals and background checks, because that is also something that is critical in the African space when you're coming to invest in the African space.
Mm-hmm, mm-hmm. And you mentioned Kwanda earlier. I saw in the chat that Linda is part of Kwanda, and I'm asking you, Linda, if you're open to share your experience with it and give us a better understanding of how Kwanda operates and what made you trust in this organization.
Sorry, I'm on a bus from work. I'll try to be as brief as possible. So, Kwanda is an organization. At the moment, we're trying to get registered as a non-profit to the UK. Essentially, it's a collection of people in the diaspora who are trying to invest back on Africa and Afro-Caribbean areas. So we, you have a monthly subscription from £5, £10, whatever it is, but depending on your currency. And then we have suggested projects to invest in different countries, and then we vote from them, we invest from them.
Linda, I'm so sorry for interrupting you. I apologize, but we have difficulty understanding you. So if you don't mind, maybe just put down a few bullets in the chat. And it's great that you mentioned you're part of Kwanda, and perhaps, you can also share your LinkedIn profile, and then for anyone interested in, they can also get in contact with you, and hopefully we can invite you for the upcoming series, because I think it's really powerful that we have working remittance platforms that also invest on the continent. So sorry for cutting you short, but to just enable the fluency and the smoothness of this conversation, please just put in your bullets in the chat. Perhaps anyone else has experience with a remittance platform. We have a company in Switzerland called Abroad. They facilitate remittance payments as well. And want to give the opportunity to someone to share. Okay, Collins, we need more remittance investment platforms.
Mm-hmm.
So I would say, based on what you said earlier, and Manuel Kernen alluded to the transparency issue, what lessons do you believe Kenya plays, or in your experience, transparency plays in cross-border partnerships? And in the preparation for today, we talked about GDPR and data protection rules in Europe. Are there any equivalents in Africa, East Africa?
I think in terms of data protection, you have for example, Kenya has a data protection agency. We also have a competition authoritative a competition authority agency where they regulate competition with market entries as well. How effective they run is yet to be determined. But when it comes to data protection compared to the market entry authority, the data protection is very strict in terms of securing data for investors and for companies. Certifications have to be done, to be obtained with even ourselves, because the fact that we are doing market entry for organizations and for companies as well, we can't really put much information out there. We can't put much data for our clients out there because it's protected. So I think we have regulatory bodies that are working on that. Transparency from them is not much as expected. Much information is guarded. And again, that comes in terms of greed, because when you guard information and when you guard that transparency, is because you're creating a loophole in itself to gain something out of it. So I think if transparency can be well articulated in the government bodies and regulatory bodies that are in charge with mandating all these aspects of investments on remittances, then I think we'll have more broad conversations on openness and trust from investors coming to set up shop, not only in Kenya, but in Africa region as well. And data is key. Information is key. But again, because of like I said earlier, because of fear of information, because knowledge is power, very many African governments will try to regulate data in their own countries for whatever reasons they might have. Because unfortunately, that is how the market sometimes is in the African market. But I think if transparency is adhered to and trust is adhered to, then as a continent, we have so much potential to grow and to go further in terms of business and investment opportunities. Mm-hmm. And also just to add on that, when you talk about transparency, it doesn't only touch base on regulatory bodies in charge of these things. It also affects families, because diasporians will send money back home for certain projects and they'll never happen. So it's across board. Trust and transparency is across board. And that's why we really nail it when we're advising clients and investors to come to the country, know the market very well, understand the market very well, due diligence, case studies, get to know what you're investing in, get the knowledge of the market, get to do background checks. We insist on very many technicalities on our list that I'll share later that enables investors to know what they want to come and set up shop in Kenya or in the region.
Thank you, Collins. So you've advised companies beyond Kenya. In your experience, what lessons from Kenya apply across other African regions?
I think, for instance, what we've seen is the use of M-Pesa services that has really transformed, like, for example, what Manuel said, you're trying to make payments to rural people in Tanzania. You're not quite sure if the money is getting to them. M-Pesa is a mobile platform, a digital finance mobile platform for a company called Safaricom. And it was established around 2008 to basically help with ease of financing in Kenya at that particular time. But now M-Pesa has grown to the region. It has become a case study to companies in Silicon Valley right now, because it has made it easier for payments, transactions to be done, even in the rural parts of the most intense places you can find and remote places you can find, be it in Uganda, now they're in Tanzania, in Ethiopia, and it has helped in payment of either goods or services, payments to teachers, to doctors in remote places. So M-Pesa is one of the places that has really, it has really brought a dynamic and a shift, a game changer in payment remittances that we've seen in payment methods across Africa. I think what also we're seeing is, like I said earlier, tax incentives by different countries, Rwanda being a very big country on that. We're seeing very many investment opportunities shifting to Rwanda. Taking into account Kenya is the largest economic hub in East and Central Africa, but we're also seeing Rwanda taking its place. Disadvantage you might get, and maybe if there's someone in the audience from Rwanda, they can expound on this further, is infrastructure. As much as the incentives are there, the infrastructure is also what needs to be looked up into. And if the infrastructure is looked up into Rwanda, it can also be a game changer in terms of companies and investors having a second option in East Africa to which country to go set up shop. The advantage you get for Kenya is, of course, infrastructure, lifestyle, housing, entertainment places compared to other African, other countries in the region. So I think when you put in cross-border lessons we learn from each other is policies taken from different countries, innovations that have made it easier for one country to make it better and passed on to the other country. So it's a broad aspect side that you can look at it at the end of the day.
Thank you. Yes, I think it's interesting with this regional hub that is building in the Eastern Africa, from Rwanda all the way to Kenya. And I see, Aisha, you mentioned that you've been using M-Pesa. May I ask you to elaborate on the experiences that you've had with remittance payments or investing in Africa?
Hi, Tallulah. Hi, everybody. Um, yeah, so I found it very difficult to send money back home because usually you either have to, go to a physical agency, you have to withdraw money, you add the fees on top of it, and sometimes the person needs the money literally yesterday, right? What I found very empowering with M-Pesa, especially, was that one, I didn't have to move from my couch, literally. Um, and I can send money, so I can top up my M-Pesa account from my account here in Switzerland within minutes. And then from there, I can send money to the person who needs it. By the way, I don't use only M-Pesa. There is another platform that I use, which is Orange Money, because a lot of people back home in Cameroon and Nigeria as well, for me, use Orange Money. So for me, when I have a family member or a friend or someone I need to buy services from, reach out and tell me this is what we need, I know the money is going to reach them within minutes. In total transparency, I have a traceability of my transactions. I can go back to my activities. I know exactly how much I paid, how much the fees are. And if I need to relaunch that same transaction, I don't need to type in I mean, I'm getting you the nitty-gritty of the tool. But it has been a game changer because, one, for me, it's a game. I'm not wasting time, literally. I don't have to organize my trip around going to a physical agency. But more importantly, I know that if someone needs the money, I can give it to them directly instead of having to go through third parties at home. And I'm not sure that the exact amount that I sent will reach the person I need it to reach.
Very interesting. So Orange Money is new to me personally. Would be interesting to hear others in the chat who've heard of it, because sometimes I feel transparency is also the lack of information that we get in the diaspora, whether it is as a person of African descent or as someone who just wants to, support a business, build a business, set up a business. Doesn't matter if you're a Afro-diasporan or just simply an investor. So knowing what applications and what tools are available are really helpful. Do we have anyone else in the chat who would like to share some feedback on sending money?
Tallulah, if I may just really quickly, there are actually plenty of tools out there. So Orange Money was developed by the service provider Orange there. Then you also have the one developed by MTN, which is the South African service provider, which is called Momo. Then you have M-Pesa, which is very specific to Kenya, obviously. There is a sister here in Europe who developed a platform called Tap Tap Money. She's Cameroonian, and the platform basically allows you to do exactly the same thing. You can send money anywhere in Western and Central Africa using Tap Tap, and it reaches different mobile wallets, basically. So those platforms are out there. They are starting to make noise, but like you said, we just need to know about them and start using them.
Absolutely. Thank you for the add-on, Aisha. So we've reached the first block of the session, and actually, you know how it is. You have 60, 70 people sign up, but we have a good group of plus 20 people. So we actually thought of either preparing breakout sessions or opening up the floor. And I think with this amount, we can absolutely open up the floor. But before that, Immaculate, I see you have raised your hand. The stage is yours.
Yeah, so very quick, Tallulah, thank you very much. I wanted to say yes, I've used some money transfer platforms. I've been able to pay taxi in Pakistan and in India by MoneyGram, and also in Indonesia. But what I think I get more from this forum is I didn't know much of platforms invented or made by Africans or our own people. So this is a very good thing that I get from this forum, which is very nice. I would love to try several of those. But I would also want to point out just like MoneyGram, which really gives a good exchange rate. I wonder, exchange rate is one of the things that really make us choose something. So if I send to Kenya, what is the equivalent of Kenya shillings to my Swiss francs? If I use either Aria or TapTap or MoneyGram, so that is one thing that influences what I choose. But another question to Collins, or maybe not Collins, but also to you, Tallulah, and AfroSwissters is on the tax part that Collins mentioned about tax incentives back home. These incentives are more to investors, but not to Africans living abroad. So, for example, if I want to invest back in Kenya, I do have the challenge for, yes, the transparency trust is one key thing. Two is my money is taxed here in Switzerland when I earn it at my salary level. And when I send it back to Kenya, put it in a bank account, for example, wanting to invest, then it will be taxed again. And so that I have no control of, which is okay, because then they will tax on my earnings in Kenya. I would think so. I haven't yet invested, but it's something I want to think of. We also do not have the more information about Switzerland's tax or the places where we live, you in UK or in the US or whichever country you're in. For example, in Switzerland, when I'm making my tax returns here in Switzerland, how do I mention this? What is the visibility and a proper system that can help me report correctly and transparently to the Swiss authorities about my investment back home? So these transparent and good systems for investments, which give good reports that I can report my earnings back in Switzerland, because this is foreign earnings or something like this. I think this is a topic we can also explore, Tallulah, in another forum for Swiss tax. Over. Thank you.
Thank you very much, Immaculate. Absolutely. And interestingly enough, Collins, we actually talked about you inviting a tax expert from your company, and it's a good input, Immaculate, that we also get Swiss experts or, from other countries to join this conversation. And Francesca, I see you've raised your hand.
Thank you, Tallulah. Thank you for organizing this. A lot of people have said a lot of things, and it's very, very interesting to note how many platforms there are. I didn't realize there were as many as that. I've used M-Pesa while visiting in Kenya, and I have to say that was already 15 years ago, and it was very, very good even then. So what I've noticed is that in Nigeria, for example, when I was visiting, that the access to use banks and transfer money almost immediately, even from small-time traders, people selling, newspapers on the road, if they still have newspapers, the small person in the market can have access to a bank account and transferring money in Nigeria is really quick and with the traceability that Aisha had mentioned. Now, what I want to understand, and I don't know if Collins or anybody else, you yourself, Tallulah, or anybody else has experience with this. If you want to transfer, you can transfer money from an account in Switzerland or the UK or wherever back into a particular account, a particular bank, but there are a lot of costs around this. But my specific question is, is how can we get these costs down? Do you know anything that's happening to bring the costs of transfers from Europe and other Western, other countries in Asia, when on individual transfer or a group of transfers over time, if there's any sort of policy incentive or move to bring it down? That's the first question. And the second question actually goes back to what Collins had mentioned earlier on as to having a base perhaps in Ghana or Nigeria and then being able to service other African countries. Is there any move being made at the moment to facilitate money transfers from these kind of banks to other systems or across platforms? Sorry, a bit long-winded, and thank you.
Thank you, Francesca. Collins, I let you answer on Immaculate's and now Francesca's point.
Okay. Thanks, Immaculate and Francesca. I think to start with the Francesca, one of the sessions we're going to have our tax expert to basically elaborate more on taxes. But with what I understand and the knowledge I have when setting up of investors or people who want to come and they work in a foreign company, in a foreign land, and want also to avoid being taxed in their home country. So there's something called double taxation, which is a regulation that has been put across. But the double taxation applies to certain countries. So not all countries, because it's an agreement between government to government. And the double taxation basically entails that you need to be in a certain country for a period of maybe 60 days, pay taxes from there, and then now to avoid being paid taxes in your home country, then you can come to a home country, double taxation that has been put in place. And I know Kenya has agreements with several countries for double taxation, the UK, South Africa, the US. I need to confirm if Switzerland is part of it, but I'm sure it's part of that agreement as well. And that can also be a way you can have a look at it, and we can share more data with you and how you can incorporate it to work for investments. Just because the incentives being given the government for SEZ is purely to have local investors and foreign investors come and set up shop in Kenya. So if you want to be part of the SEZ as a local investor, you have to have an entity or a company in Kenya. And of course, it has to be vetted by regulation. You have to do a body of the company, a plan of the company, what you intend to do with it. So unfortunately, you need to be on the ground. You need to have an official company in Kenya for you to qualify to be part of the SEZ, to enjoy the tax benefits, to enjoy the affordable economic policies under SEZ that investors are enjoying and local entrepreneurs under SEZ are employing. So I think that answers the fact that you can have it, but then you have to have a local presence. On the issue of double taxation, I will look into it further to see if Switzerland and Kenya have an agreement and how it can also be of benefit to you as a person to look at it in terms of investment as well. To Francesca, in terms of, I know Nigeria has amazing entrepreneurs and they're doing amazing work in terms of digital finance and mobile banking. And that is why it has made it easy. I think Kenya, Nigeria, South Africa, Egypt are the ones that are ranking high when it comes to digital finance, mobile money advancements. So when you look at it in terms of movement, the platforms that are being created right now, we have even one in Kenya, and I believe they're also in Nigeria. It's called WapiPay. So what I will do, I will share the information with Tallulah as well. WapiPay is trying to revolutionize remittances like M-Pesa. So you don't have to go to an office to start sending money like the way it is, but WapiPay is coming to revolutionize the remittance part of it as well, whereby even if you operate from Nigeria and you operate from Ghana, you can use WapiPay to make payments for salaries or equipment in Mali, in Senegal, in Burkina Faso. You can literally use the services in the remote places to make money. M-Pesa is just basically a platform for money payments. But when you come to remittances, we have amazing companies from Africa techpreneurs who are coming up with these initiatives to actually promote remittances coming from the diaspora. Unfortunately, regulation on cost has to be across board to bring the remittance cost down. Speaking on behalf of Kenya, the reason why sometimes we see the remittances going up is because the remittance service providers also have to break ground on the end. They also have to make profits. They also have to meet the day-to-day basis needs. And why that is happening is that, like I said in the beginning, when you have government wanting to tax diaspora remittance, so that loophole has to be covered with something. So either increase the cost of remittances so that you cover that gap. But then if we had an in-sync system whereby government works in tandem with the remittance service providers, and this goes across African governments. If they can work in tandem with and partner with the remittance service providers, partner with the diaspora family, it will be easy for diasporans to send money on a regulated platform whereby cost is lower, because the money coming to the African diaspora, as we said in the beginning, is over 100 billion, more than aid, more than FDI being brought into the countries in Africa. So instead of looking at diaspora or remittances as a money-making platform for governments to cover their debt ceiling and to recover their cost of paying debt, they need to partner with the remittance service providers. They need to partner with the diasporans so that they can have initiatives of how they can cost effectively send money on lower costs and encourage inflow of money into the continent. And that is the only way we can do away with aid or with FDI providence, because as we speak right now, when we had aids being cut, the African countries' presidents came out screaming. But then you ask yourself, why are you screaming? Because we have sustainability mechanisms that if we put into place and use the diaspora well with transparency and trust, they can fund some of these projects through diaspora bonds even, if put into place.
That's very good points. I think the outcry after US aid left Africa under the current Trump administration was it received major outcry. And you, Collins, we had this conversation about so many Africans actually being grateful for those organizations leaving the continent, because there have been questionable practices that came with those organizations. And Evelyn, I want to give you the floor and also prepare a question for the other investors in the room, to also ask what is one aspect of African markets that you're curious about and that we haven't explored yet. But Evelyn, over to you.
Thank you, Tallulah. Thank you, Collins, for mentioning the double taxation, because for me, this is an issue that has disturbed me for a while. And I can confirm that Switzerland is part of it. And I think I keep asking myself, is there a way that we could make it a little bit better? And I guess in the next session, when you'll be bringing the taxation guy, maybe we'll get more insights on this. But my question is regarding the incentives that you mentioned, that the government is giving some incentives. My experience has been, as much as they are incentives, sometimes there's a disconnect between the policies and the actual implementation of the policies on the ground. And this creates like loophole for corruption and bureaucracy. So my question is, does Zaria support the investors during the journey of setting up, or is it just doing some kind of research and, that's it? What kind of support do you offer?
Thanks, Evelyn. I think that's a good question. We support the investor from market entry to setting up the entire way until final getting the registration certificates out, regulatory certificates out. We work with the investor, we work with the company hand in hand. So the first initial stage, of course, is market entry information. Advise the client, advise the investor on market entry information, depending on the type of field they want to venture into, the type of sector they want to get into. And then, of course, give advice on where we feel appropriate in terms of if you set up under the SEZ mechanism, this is the tax benefits you're getting. For example, right now we're setting up some beauty and cosmetic companies that are coming to Kenya right now, and they want to set up under the SEZ platform. Now, they don't want to set up a physical presence in Kenya, but the advantage you get, you can set up your company in Kenya through someone already who has a presence under SEZ, right? You can use their platform to actually register your business under the SEZ. Because yes, you said it in a very clear way that government puts this into place, but then of course the bureaucrats in the system who will want to purposely create loopholes to channel in corruption for you to be accepted to get the SEZA license, because the SEZA license is what gives you authority to run an SEZ in Kenya. So how we come in hand is that we know the regulatory requirements for you to obtain an SEZ license. We make sure that if that threshold is met, then all the legal requirements that are required for you to be part of the SEZ, we work with you in tandem with our legal team to make sure that you're part of the SEZ structure. Once you present your business platform to us and you present it to the board, and they evaluate it and they see it fit and they give you a license. So that is how we work with you. We just don't give you information and then throw in the deep end. We work with you hand in hand and make sure that whichever sector you want to come and invest, whichever way you want to come and set up a shop in country, we advise you in accordance with what the market is and what word on the ground is, and how also we can get you better partners to work with, distributors on the ground as well. So we work with you hand in hand to completion of the stage. And that is why I said on our platform, we have a tracking app that once you get into agreement with us, you can actually literally track the progress of how your company is being set up from our application, because we load the documents there for transparency purposes. We make sure that you're working, you are understanding what is happening step by step on the platform, that we only share with the investor, because this is a sensitive platform and information is very sensitive and delicate that we have in that platform. So that is how we bring out transparency as we work with you to set up your business in Kenya and in the region as well.
Collins, this sounds very exciting, I think, for anyone who wants to invest on the continent, depending or notwithstanding what industry to enter. And Daniel, I don't know if you're still active in this call. It is quite late here in Europe, but you mentioned earlier that you've been wanting to do business. So is there an entry or is there a curiosity that you have when it comes to investing in East Africa from the renewable energy space you operate from?
Yeah, definitely. I think there is lots of potential. I think they can skip some sequences we had in other parts of Europe or US, especially this fossil sequence. I think we can skip, like electric and mobility could be also interesting. Yeah, and for this, I think it's crucial to have like a certain infrastructure. But I think there are more platforms as I have known before, and this is, I think, a good step. I feel like the people, for example, Collins, for example, you have an idea of already what is needed and what is important to give platform to different investments. And that gives me a good feeling that in the future, things can work more easily for people from abroad.
Thank you.
You're welcome.
I see there's a question in the chat from Aisha. What is the SEZ? Yes, I think the caption is translating it wrong. It's the special economic zones. And I also have a question to other Asian or European investors, if there is an aspect of African markets that you are curious about but haven't explored yet. Okay. Then another question to the group. For those who have received funding from abroad or sent money, what has worked well in partnerships and what would you avoid the next time? Perhaps, Manuel, since you have worked with Tanzania, perhaps you have a specific example, even if it was in the education space, but you've had partnerships on the continent that you've maintained.
Yeah, I think we've talked about M-Pesa. I think that's been the most useful one. So sending money on my M-Pesa account through, because I have an M-Pesa account, for example, on my phone and also then on the ground when I'm there. But then using Remitly or SendWave, whichever those secondary services, working that in tandem could be improved. There's money that you lose, of course, as we've discussed in the process of doing that. And also I have lost money myself in sending through those platforms, whereby, for example, Remitly would send money to M-Pesa, but then M-Pesa would say they have not received the money, but Remitly would say that they have sent the money and I have lost money that way, for example. And also sending money in terms of to people that, I mean, in my case, there's people that are, you know, in dire situations sometimes, and so money needs to arrive quickly, and sometimes it's unclear how. Sometimes there's delays with that regard. In terms of the partners, the more partners you have, the more complex it can get because there's different banks, different procedures, and people have different opinions on which one to use sometimes. So it's not easy, I think, when you deal with money anyhow. As soon as money is in play in any, it's not easy. But yeah, I think M-Pesa has been helpful. But then I think certain banks, I'm not as familiar with that, but some banks are more involved. So for example, if I want to send the money with Remitly, there's only certain banks to which I can send it to, or there's only certain cellular services that I can send it to. So if I use Remitly, for example, I can only send it to Vodacom or Airtel numbers. Now, if you increase that, and Vodacom is the most expensive one, which is a problem if you're dealing in some cases people don't have Vodacom, and Airtel is not the cheapest one either. So then access, I think, is also an aspect that could be improved because it's one thing. Yeah, I think it's also that's something that we haven't talked to as much. Yeah, depending on who has the deals in place with which companies and which service providers and so on, depending on the region and the people. Yeah.
Thank you, Manuel. Yeah, you've raised a great point with access, and I think also access to certain markets when trying to enter a market to invest, Collins. Would you say there are any sectors in Africa that are being overlooked by international investors? And talking about the telecommunications sector, for example, how easy or how difficult is it to invest into those sectors or even come up with a groundbreaking innovation? Is it hard to enter the telecommunication space? Because from what we're hearing, there is so much room for improvement and innovation.
I think the telecommunication space is a vibrant space, first of all, but it's been defined for the big players, just because of the size of the magnitude that it is. But what we're seeing is innovations in terms of mobile applications to try and see how they can ease mode of payment remittances to other countries. I can tell you, for example, I was doing some work in Congo. So there are two Congos. There's Congo Kinshasa and there's Congo Brazzaville. And I was doing some work in Congo Brazzaville, and I wanted to make payment to our people on the ground, but I can't pay them in dollars. I can only pay them in Congo francs, and if I use the bank, my bank, to make the payment, I was going to lose about 100,000 Kenya shillings just to make that payment to Congo for my people on the ground. So I think we need to come up with systems of payment systems, a Pan-African payment system. And that is what is also being pushed across by the African Union, a Pan-African payment system that can make it ease for ease of remittances or making payments to African countries, that can lower the cost of losing money when making transactions per se. But if you look at it in terms of sectors to invest I think telecommunication is very big. We only have the big players in the telecommunication space. Of course, Safaricom is partly owned by Vodafone, which is a UK affiliate. But Safaricom is half of it, of the shares is owned by Vodacom. We have Airtel, we have the big players in the market for the telecommunication sector. But what you're seeing and encouraging is applications, mobile phone applications, digital finance applications that can transform how money is moving, how payments are moving, how to make it easy for payment transactions to be done within the African continent or even on a global scale perspective. And that is why you have companies coming up each and every other time, tech companies coming up. Of course, the hurdles you have is funding for these startups to generate funding for their products to scale up. But if you can have competition in terms of companies that can come up with products in the African setup that can compete with the telecommunication as a second or as an option to the other players that you have in the industry, I believe very many, even Kenyans themselves, would move, because Safaricom is only the dominant factor in Kenya right now, the biggest telecommunication setup in Kenya and in East Africa as well. Of course, you have MTN in Uganda, but I think Safaricom is more dominant compared to other competitors out there. And the reason why they're dominant actually is not even of a voice call, is because of M-Pesa. That makes them the dominant force in the region. A product that they developed makes them that dominant and brings them more profit than even voice, right? So it is a 50-50 basis in terms of investments in the telecommunication sector, but you can look at it in the emerging sectors for investments, where we have the creative economy coming up, we have the blue economy coming up, we have mining, environmental and forestry coming up. Those are the emerging sectors that you're seeing, not only in Kenya, but in the region as well as coming up. Because the big sectors for investments, of course, you have is manufacturing, healthcare, construction, livestock, tourism, and agriculture and ICT. Those are the big sectors. But people are overlooking the emerging sectors of the economy. And right now, what you're seeing also is trade missions from Switzerland, from Europe, really now coming into the creative space in Kenya and in the region. But Kenya is becoming a dominant factor for the creative economy investments as we speak right now. And this is also going to be articulated more in the EU-Kenya Business Forum coming up as well.
Thank you, Collins. I am mindful about time, and I know you want to share some tools and resources. So I want to enable a few more questions from the audience. And also, Collins, we've talked about this with someone who's never invested on the continent before. What would you say is a realistic amount to start with? And let's say I have $1,000 and would like to start investing in the Gateway, East Africa. What sector would you recommend me to start and why?
So for $1,000, top of my mind, I would say beauty and cosmetics. That's what I put my money into right now. This is because the beauty and cosmetic space is a very, it's booming business right now in the region. We are having international firms, international companies setting up shops in Kenya, in Tanzania, in Ethiopia, in Rwanda for beauty and cosmetics. So we are seeing a surge, even internally as Zaria Mobility, we are seeing a surge in beauty and cosmetic companies coming to set up shop in Kenya. So if I was to tell someone who has never invested with $1,000, beauty and cosmetics would be an ideal place to start because there's potential in the market. As long as you know your product and you know the market value of your product, then that's the space that you can actually invest money into.
Beauty and cosmetics. Interesting. Daniel, please.
There is a project I heard about in Namibia. It's sorry again from the West, but yeah, there was about producing hydrogen with solar energy, and also as a side project, they make some ammoniac or something like that to produce food as well. And I don't know if there is a project like this in the east of Africa, like in Kenya, for example.
I think we have top of my mind for the hydrogen project. I would say I know of a project like that in a place called Nakuru in Kenya, whereby we have an investor, and we have an American investor in the climate tech space, who is actually the one spearheading that particular project. I know it's a big project that he's funding together with other investors, but then I can get more information about it because I know it is in tandem with what I've heard of the hydrogen project in Namibia. Though I think Namibia is going full scale on it. It's a very full scale project. For Kenya, I know it's still on the early stages, but being funded by one of our clients, an investor from the US. And already he set up shop here and working with the county government as well of Nakuru to actually give benefits of that project in the region. So of course, due diligence, of course, has to be environmental factors have to be considered. The reports I think came out towards the end of last year, if I'm not wrong. I'll check that for you. But the reports have come out for the environmental impact the project will have. So I think the county government has to give the go-ahead for the project to begin, and the government, and that is where I believe they are right now with the discussions. But I can get more detail and share it with you as well.
All right, thank you very much.
Yeah.
Thank you for your question, Daniel. Do we have any more final remarks before we move to the final section of today's first session?
Tallulah, sorry, if nobody else has a question, I'm going to jump in and just ask, in addition to that question, the previous question and others, how about the education sector? There is a huge population that requires bringing into, kicking and screaming into the future economy for Africa, whether that's leapfrogged or whatever. And how about education, and particularly online education at a very high standard? Is this something that people are investing in?
Yes, I think we're seeing, of course, education being key, knowledge being key. We're seeing government promoting investment companies that are really promoting online educational courses, online educational investments. So that is a sector that is in a separate docket altogether because it's purely under ministries dealing with educational, the Ministry of Education, if I may put it that way, or Department of Education, if I may put it that way, depending on the country, that are fully mandated to regulate also those particular investments. Those companies coming to invest on education. But it's a key government project that many governments in Africa are also working on. I think we're seeing a surge in early, I'm trying to see the best way to put about this. The girl, women-led initiatives to empower women in education, because that is a gap that is huge in Africa, whereby only boys are getting educated and the women are told to be in the village. So we're seeing institutions and investment companies coming up to empower women. The Bill Gates Foundation, for example, they're investing heavily in healthcare and education in Kenya and in Africa in general. So I think it's also a sector to look into. I know we haven't spoken much about it, but education, I think, is a sector that it's a whole dynamic altogether when you look at the investments going into it, which also needs funding, because I think there's so much loophole when it comes to funding for the education sector in countries in Africa.
Perhaps, Manuel, you being an expert in this field, I don't know if you have any remarks on that.
I mean, we talked about, so online was a question. I think online, it depends where, and it depends if it's a public or private school, for example. So I know, for example, in Tanzania, the ease with which you can work with schools sometimes it's a little bit easier when it's private schools because there's a little bit less regulations than when you're talking about public schools or government schools. So that's a difference. And also in terms of population, again, it depends. Rural versus urban, that will make a big difference in terms of online access and knowledge. So if you're talking about investment in education and you're talking about sustainability, then you must also talk about teacher development and resources available across the board and not just in certain specific areas where the interest might be higher, where the return might be higher, but where there's not the greatest need. So when we're talking about gaps and things like that, sometimes those are more prevalent in rural areas, but there the investments will not be as high because returns cannot be as high and the progress will take longer. So you need a more of a long view picture on that. In terms of girls teaching girls, CAMFED, who's an NGO, has a pretty good program in that regard in Tanzania, but also in other countries where they're talking about, as Colin said, girls teaching girls, meaning like you have leaders from the places themselves educating, being mentors, and those are girls mentoring girls, for instance, in that case. So there's developments in that case. Now, specifically to certain topics, also in the case of the studies that I've been making is with regards to menstrual hygiene education, and there's a significant gap of knowledge there as well. And then the use of technology. When I was also consulting with the EdTech Hub, obviously there's a pretty important gap there, but I think, as Collins again mentioned, with the Gates Foundation and others, founders, funding bodies, there is quite a bit of money going into tech. So there's positive developments in that regard. But again, I will go back to my initial point when it comes to transparency and when it comes to who has the money and how the money is spent. I think in that regard, there's a lot that can be improved upon in terms of where, who decides on where the money goes, and how then that money is being utilized to bring out the best results as well, and how those results are brought to light, how they're being analyzed, and what type of tools are being done in that regard to really have the evidence necessary. I think both for investors, it's a question. If you look at statistics, for example, from governments, if you look at the reports, there's people making those statistics and they want to keep their jobs. And so generally speaking, the trends tend to be always positive from one to the next. But the question is how that data is put together, and it's difficult. I think there is clarity is necessary as well, because we're talking here about investing, yeah. And so you want to make sure that the money and the resources are used as good as they can. Therefore, the evidence needs to be as accurate as possible as well, so that the best decisions can be made in that regard. And in terms of, I think in Kenya there's Zeraki. I forget if I don't say correctly, but I think they've also gained, and that's a company working with schools to make platforms to make it easier to report even grades and things like that, because that's a massive gap, right? When I was working in rural Tanzania, getting access to data, it's one thing to get all the clearances to work with schools. It's a whole other game then to get that data, who sometimes are not even in electronic systems. So you have to go to books and so forth. So it's just a little complex, because I think there's so much potential. There's so much room there in the education sector to really make quite significant impact, both in terms of returns, but also in terms of impact, social impact. So I think I'm biased, but I think education is certainly a critical area. Also moving forward, like in terms of Tanzania, for example, being one of the youngest countries, there's going to be a wealth of people, boys and girls, who will graduate, and they will be looking to have jobs and so forth. So there's also that market to think about, because I know many people. My wife is Tanzanian, and there's so many people who will even graduate if they are able to graduate secondary school, for example, without any quite tangible work as well. So there is a lot. in that sector, I feel like.
Thank you very much, Manuel. You made it so much easier to prepare for the upcoming sessions, and I already look forward to pinning you down on a EdTech episode. So definitely bear with me as I will reach out to you for another interview session. And very mindful of time, I saw that Linda had a question. I will make sure that Collins answers your question. We will note it down because Linda asked, Collins, do you have any thoughts on investing in the food processing industry in Kenya or East Africa? So it is on record and we will get back to you. But as we wrap up and being mindful of time, Collins, if you could just provide a few sentences on the different tools that you use to prepare for a company to come into the East African markets, and we will provide the more fleshed out points in the follow-up email.
Great. I think so. As a company, what we've come up with is something called a needs analysis questionnaire. A needs analysis questionnaire is what, when a client reaches out to us, we will send it to them. And this needs analysis questionnaire is, first of all, an interactive questionnaire whereby we want to understand where do you want to invest in, where you're coming from, what industry, what sector do you want to come and invest in. We learn about you. Do you have a family? It's a general overview interactive questionnaire whereby we want to know each other, get to know each other, interact with each other. And based on that questionnaire, then we'll come up with a program. We'll come up with a tentative case study or due diligence report based on what is filled in the questionnaire. And that is what we shall guide our clients based on that, in terms of how to come with the market research into investments, how to look at where to invest in, which sectors to look at based on the questionnaire, and which areas of investment you want to come and work with. And also, it creates an account to our Zaria platform. So when you go into the platform, you will see all the details based on the conversations we've had in the different sectors someone wants to come and invest in, and how we intend to help invest in the region or in the country. And that creates transparency and comfortability to basically test the market and come into the market and put investments into it. So our needs analysis questionnaire and our Zaria platform are the two tools that we have as an organization to help the diaspora or the investors get access to the market.
Thank you, Collins. And with that, I would say let's wrap it up. I want to thank all of you for tuning in and joining the very first session today. Today's conversation was about shifting the narrative and discuss really what it means to send money as a lifeline to using it as a tool for lasting investment, and how we, to learn how we move from reaction to intention. It's great having heard the different inputs, and we've taken notes of all the advices. And in the next session, we will focus on women, innovation, and market entry. We'll explore how women-led businesses are driving change across sectors like tech, beauty, and agriculture. And we will also take note of the EdTech questions. And please feel free to reach out to Collins and myself. And if you have any more feedback, we are very receptive of it. In session 3, we will dive into mobility, return, and building trust. We want to dive deeper into it and have more voices joining this conversation. So thank you that you've been part of today's session and for engaging at this late hour. The AfroSwissters Investor Circle will be launching, and there will be more information soon. I think one thing that stayed with me personally is that, as a Pan-African, I'm just very keen on investing in a space where there's growth potential. And having Collins with us today just really emphasizes that there are trustworthy individuals and entities on the African continent that are open to working with the diaspora, and having investors who are non-African heritage work with us hand in hand. I think there is a lot of progress that we can do. And social impact is a very viable business model, and I look forward to exploring it further. We would love to have your feedback in the feedback form that I will share after today's session. So please join us again, spread the word, and be part of something that is growing. Collins, again, thank you for your time and your trust. And yeah, let's continue the conversation.
Thank you.
Thank you all. Have a good night and be blessed.
Thank you so much.
Thank you.
Thank you. Bye.
Thank you very much.
Bye. See you soon.
Goodbye.
Bye-bye.
Thank you.
Thank you.
Bye.
Bye. Good evening.